Welcome to Power Investing in this edition of Weekly Sector Review. In these videos, we're going to go through the sectors and sector ETFs that we cover in the Power Investing website. We're using our subsectors and our equal weight indexes that we build, as well as many of the ETFs that you can trade directly in. So let's go ahead and get started. In the last video on the macro review, we went over the market sector, weighted ETFs, equal weight, and the small caps. Just noting a few things before we move on from here. You can see that your defensives are on top, technology, materials, and then you have healthcare here in the kind of in the middle, and then you have your communication services on bottom. Equal weight's very similar, and small caps are similar except for the fact that the information technology jumps up here to number 3 on the small caps versus other small caps. So that's something we might want to take a note of. And then large cap or small caps, the healthcare is still down towards the bottom. We're back up here in the large cap and the equal weights, it's much more to the middle and the height. So in healthcare, it's the large caps that have been starting to, or equal weight, mid and large caps that are moving at the moment. Okay, so now from here we want to move over to our universe page and take a look at kind of how our own equal weight breakdowns do. We've already gone through all the breadth and things like that in the macro review, so jump back and look at that. One I will note here, because we're going to look at it in a couple of the sectors that we review, is these divergences we have here on this last back test to see that the market's made a slightly lower low. These number of new lows did not, and then on the way out we get a nice spike here in the short term. That's a good start. Obviously we need follow through and you have to continue, but that is a great way to start an initiation of a move. So when we get in here to our equal weight sectors, we're going to talk mostly about the fact that, again, we've heard a lot in the last video about how these defensives are up top and have been leading for quite a while, but we're not really going to focus as much on those, but the things that we hope are starting to move, like healthcare is one of our best movers over the last week. So things like that, information technology, things that might be able to be reversing after some tough times. Again, many people want to focus on strength, and we're certainly going to look for strength here, as well as some pullback plays. However, if all the strength is in the defensive names and we think the markets are about to rebound, that may not be where we want to continue to focus. Now, if you don't think the markets are going to rebound, then obviously that's a great place for you to be concentrating. Now, when we get to our equal weight subsectors, we can see ranked by, I had already flipped it around, but ranked by the RS on the way down, it's definitely still defensive, has a few things poking in there like industrial goods. Semiconductors is up at number 4 still, something that just really never lost its luster. It came down some, but as an overall equal weighted sector held up very well. But when we start to kind of sort these, which you can do it a couple ways, one by weekly movers, who move the most for the week. You get hotel, restaurant, and leisure, biotechnology, medical equipment, pharmaceuticals, aerospace, defense, consumer services. These are the areas that were moving last week, so this might be where we want to pay attention and look for our new ideas going forward, especially when we see a lot of these in the yellow and orange here instead of the high green. Now, again, it's not terrible to be high green like the semiconductors because that means it held up. But a lot of times you can see these guys have pulled back pretty strong, like hotels, restaurant, and leisure. A quarter ago was at 90, dropped down to 65 and it's back to 65 actually after dropping all the way down to 2018. Sounds like a nice trough that's trying to build the right side of a base. Another way to sort this is as the RS movers. Again, hotel, restaurant, and leisure right on top. Diversified consumer services moved the second most last week. Healthcare services next, and industrial metals. I'm going to jump through and we're going to go through a few of these pages that I've already pulled up so that we can kind of take a look at what is out there. Let's start with hotels, restaurants, and leisure. Again, looking at our own equal weight indexes, we can see that on the top pane of this chart, this is the relative strength rankings that you just saw on the last page versus all the other subsectors. That's what this first row is here, and then our first 3 rows. Then when you see pure down here, That's this subsector versus just the other subsectors in its sector, so just the other consumer discretionaries. But looking at this particular area, you can see it made its lows as far as relative strength back at the lows when RSI went below 20, and then CFG went well below zero back in the 1st of December, end of November. Came up, bounced, failed bounce, and then made a higher low here, and now is trying to move back above those highs. RS spiked up, so this is a good sign to start in this particular area. From a breadth standpoint, we definitely saw some, can't really call them divergences since the price didn't make a lower low, but we definitely saw much higher lows across the short-term measures, and then we're seeing our summation index start to cross now. And this is just for the hotel, restaurants, and leisure. One of the things we offer here that most places don't is breadth on a sector and subsector level. The relative comparatives are really something to be looking at here, though, is noticing how it made from a relative comparative against the universe, consumer discretionary, our own index, SPY, QQQ, and IWM. They all made lows right around here. Okay, versus the SPY, it back tested a little bit, but the rest of them have been making higher lows all the way across. Something we want to be noticing early on. And then we go over to the right, the ones making basically new highs. We can see that the new lows peak back there with everything else, much less concentration on this last pullback, and then now some nice surges up to more than 50%, 40%, and 11% making new highs on these respective time frames. Now, going down into the individual stocks is something we're going to do in the next video, but that's something that you can do is you can sort this table. You can look at all the stocks that are part of this particular sector. The next one we're going to go to is the Diversified Consumer Services. And basically this is one as well that when we look at that same RSI chart, this has been in a monster downtrend since when? All the way back to, come on, this doesn't want to fit right. There you go. All the way back to February, March of this year, and it's come down the whole time. Under the MA bands, now it's trying to peak above with a few green candles. If this can get a reversal, notice it's been in a bear range the whole time. We need to get it over 60 to see that changing. But what we are seeing is a 3-month RS making a big jump from flatlining almost down near zero up to the 60s now, moving the 6-month up as well, which is the red line. You pull this one on down and kind of take a look at its breadth. Its breadth has certainly made it up 85 over the 20-day moving average, 85% of the companies. Now, again, we always want to take a note as far as how many companies are in this. So when we look at Diversified Consumer Services, we see there are 26 different companies in this. So the percent over the 20-day is going to move a little bit quicker than something like Biotechnology that has 177. Now, looking at the relative comparative charts on this one again, you're kind of in a situation where you can see they're starting to turn very slowly after long downtrends. Note here that the downtrends versus small caps, consumer discretionary in general, and the universe in general started before this peaked out. Here, the same thing, big clusters of new lows and a lot of clusters across the board, just now starting to turn up. You are making the highest new highs since the peak as far as the 20-day, but you still have a good bit of work to do on these longer terms. So this is certainly an early turn if you want to be looking in this particular area. Names are down here, can sort them how you want. Now, the next one we're going to take a look at here is healthcare services. Healthcare services is kind of the forgotten area in healthcare, but as you can see, it's really held up well during all this. It just finally came down in November with everything else, made a higher low, and has now already made a higher high. Now, the RSI is still in a bear range, so we want to keep an eye on that, but price is starting to confirm here. When we look at the breadth here, also having a strong move above 85% as far as above the 20-day. Both the 50 and 200-day here are above 50%. Summation is making the turn. Now moving down here to its relative chart, just now starting to make the turn versus the SPY, QQQ, and IWM. Still not really doing much versus other healthcare, so it may not be the best place in healthcare, but it is an early mover, and you're seeing a lot of spikes over here as far as the percent making new highs. Still could be a good place to look for some names and some names that aren't quite as popular. as many other areas. Also in there, though, we're going to look at biotechnology. It's an area that's moved some. It's hard not to see some of the moves we saw this week, and you can see this particular chart again has been in a downtrend, big sideways move, and had kind of a failed breakdown. It's trying to reverse now after being, I guess you could say, out of favor for quite a while, because other than just a few large names, everything has been getting kind of beat up in this area. We can see it start to resurge in its breadth here. Now, with 177 names in there, a summation index turn and cross signal is positive. 69% of those 177 names are above their 20-day moving average now. And after a lot of new lows, a high spate of those, we're starting to see a few new highs peak in there. This is a good start, but again, we have to know we're early in this stage. Now, when you look at its relative strength, it's turned up against pretty much everything since this December 13th low, now trying to make higher highs. But as we can see on a longer term perspective, it's got a long way to go on a relative standpoint. Same thing with this breadth here. And then down here again, we've already sorted these by the RS movers. You've got TPX, Blue, Cron, VCell, CLDX. Some of these will be in the next video when we talk about individual holdings and some of the ways to find those. Now, another sector we want to hop in here and take a look at while we're talking about things is semiconductors, because obviously it's one that not only has been strong, it's held its strength for quite a while during this pullback especially. Sure, it pulled back some, but nothing compared to all the other things. Now, everybody looks at things like AMD, NVIDIA, those kind of things, but we want to let you know that there's many more opportunities here to take a look at. Now, when you take a look at these and see this particular RSI chart is holding up very well and starting to move back higher after making a double bottom, look down here, the breadth is strong, 75% above the 20, 70, and 69% above the 50 and 200-day respectively, and the summation index hasn't crossed yet, but it's still well above zero. So again, gets a little bit more of a benefit of the doubt than those are below zero. Now, from a relative perspective, it ran up early in October into November, pulled back in November, summer, flattened out, and now is trying to turn back higher. Percent making new highs is not high as some of the others, but still in the 33% range is not too bad. So this one may not have the leadership, but still show strength as we come out of this next move. We look at the RS movers here to find things other than the names we know. MU, yes, a name we know, but HIMX, OLED, ON, some of the other names, SIMO, Form, are good plays in there. We might find them in our next video. So hopefully this gives you kind of a bit of an idea. One more thing I'm going to jump into real quick is something that's kind of hidden in the site. It's called the Custom RS Snapshot. You find it under here over More, and this allows you to enter your own tickers. What I've done is I've entered my 120-something sector ETFs that I have as what I call my GT Select, and I can rank them and sort them just versus the things in here. So what we do right here is you can see IGN is our top player there. Okay, IGN is one of the software plays. ITB, SMH, these are the areas that are the highest relative strength, REZ, FIVG in my particular universe. And then when I look at the movers, I can see here PSCH, small cap healthcare, starting to move. As I said, they were not moving as good before, but they're starting to move versus this. XME, PEJ, which is your entertainment, KBWY, banking, and BJK, your casino and gaming. So some of the areas that are RS movers going on, these might be some to take a quick look at as you move forward. All right, hope this helps. Hope everybody has a great day. Good luck. Come to powerinvesting.com to take a look at how things are going in the sector world. Again, it's power-investing.com. Have a great week.